listening to the Real Life Trading Pre-Market Day Trading Show.
What is going on, everyone? Let me get my computer up and working this morning. Good morning. Everyone had a great long weekend, ready to capitalize on the movements of these markets. What a great day to be a day trader. Yeah, great gap today. We're going to be implementing the 10 EMA strategy quite a bit more here in the beginner's room. So there'll be a lot more trading happening, which will be fun. Yeah, so I'm pretty excited for. I woke up, saw the gap, and I was like, okay, especially because the markets were trying to hold supports all Monday on the future. So it's a pretty big deal that we're starting to break down. I'll dive into the markets here in just a minute or two, just letting everyone get into the room here. I know it sometimes takes a few minutes to get in, so going from there. If you've got tickers for me to look at, you can start throwing them my way, and I'll add them into our watch list to keep an eye on. We'll get going. Good morning, my friend. Matthew's in the house. What's up, Matthew? Cam's here. What's up, Cam? Good. What's good? All right, let's dive into it. So starting with the SPY today, we are still an inside range candle. So the low of yesterday, 459.98-ish area. And we are not quite below that. I do think that we tried to dip down below it once and got bought up. So this pre-market is actually looking like we're going to be trying to set up for some sort of push. Sorry, I have my little thing here. It's not wanting to work. All right. Get this thing going. Sorry. Computer doesn't know it's time to work again. A long weekend. All right, there we go. So the pre-market does look like it wants to push a little. This is an inside candle, so I wouldn't be shocked to see a lot of chop coming in on the markets. But overall, not looking incredibly strong. We had a pretty good gap down on Friday. We got bought up, and then we're gapping right back down to the low of that. Not strong. The Qs, this is the stock I'm going to be looking at. The Qs today, I mean, we are clearing the low of that Friday. It is a gap and go, meaning it is a bull candle that's gapping down. It's at a perfect location. This is exactly where you want the gap and go to be, just low enough to break that pivot, but not all the way down where you still have room to get, right? If we were gapping down to here and my target's this, there's not much meat on the bone. But because we're up here and my target is this, down at like 369.75-ish, we've got a long way to go to get there. And it's very possible because we are gapping outside of this range. Now, do we actually open below that low? I don't know. If I put in the low right there and go to a 5-minute chart, you can see we're pushing back up into it, just like the SPY. We have made a double bottom on the pre-market. Pre-market trading starts happening. We gap up, we run all the way back down, and then we're kind of chilling. So this as well could get a little pop on it. We will see what it's got. So overall, I'm going to be a little bit patient with these markets just because I think a little bit of bullishness could come in. If we sink right away, I'll be looking for a retest, giving everything 5 to 10 minutes just to show me its hand and then not have to guess, right? Like, okay, we're bearish. Let's find our entry. I don't have to try to predict if we're going to go bearish or not. All right, we've got a lot of tickers coming in. So let's jump on it. Shopify's first here on the list in our room. What's up, Corey? So Shopify is I mean, Shopify has been very beat up. It's into a support zone now. We're getting some volume down around in these areas. I like that. It's an inside candle gap. So it is stronger than the markets. It's not giving me anything that's amazing yet, but this is a very good support. That's what we've pulled back to. I do think this can go a little bit lower, but the bulls are going to try to hold this level because of how extended it is. For a day trade, there really isn't much to go off of, but I do love the fact that we're low on the RSI. We're coming into a support after a big move lower. Could go a little bit more down, but I expect it to start to bounce. Day trade wise, inside candle, I'd go find something else. If I'm being honest, that's where I'd be at. Especially because there's lots of great gaps out today. So BAMDev's got CPE. If I could type CPE, Cologne, petroleum. This is nice because it's doing something different than the markets. Nice retest gap. It had a very big day Friday and a gap up. So we do have a resistance coming up into there. That was really bad. Horizontal line. I'll just draw a line there. Got a resistance right up in there. I do think that would be target for the day. Let this retest. So if it runs out the gate, try to get in on a retest for it to go higher. If it sinks, start to look for your entry supports. So that one's not too shabby at all. We can add this one on the list and see what we get. All right. I do love that it's doing something different than the markets, though. That's awesome. So Baba's having a 4% down move. It's a retest gap, and we're right into a support. We've got a lot of support in this area. I don't know how much lower it's going to want to go. I do think it goes lower, but a lot of support here, already down 4%. Probably going to fade and go back bullish and try to fill this gap. For me, I would probably pass. If I don't have like a really clear picture of what it should do, I probably won't take it. So that's my thoughts on Baba. Gap down into a support, probably fades back bullish a little bit. What I would look for is in a day trade. Haley, what's going on? Good to see you as well. How far would you do a put on SPY on the downside? Haley, for a short put, like you're selling a naked put, or you're talking about buying a put? How far ahead would you do a put on the SPY on the downside? Yeah, let me know which one you're looking at. Are you buying or selling that put? Because that changes that answer. In the meantime, let's get to SoFi. SoFi is a bull candle gapping down. It's very beat up into a support, pretty low on the RSI. Quite a few bear weeks in a row. I don't know how much more lower this will want to go. It is an inside candle still. So it would help if we broke the low. If we opened below the low of this, that would give me a sign that the bulls are still strong. The bears are still strong. The bulls are getting weaker. But the bulls at the moment are holding that low. That's really important. And I think we might be a little too extended. If anything, I feel like this is going to be very trappy and choppy today. So that's my thought. So like you said, you're underwater on this thing. I guess my question to you would be, what was your plan going into it? Is this a long-term hold? Is this a swing trade? Let me know, my friend. So let me know what the plan for this thing was. Long-term, meaning you're going to hold it for years. Swing trade, meaning you're probably going to hold it from a week to a month. Was this a day trade that turned into a swing trade because you didn't want to take a loss on it? Like which one was it that you're underwater on? Let me know. That'll help me out. All right. So we get back to Haley. And then I got a lot of questions coming in on YouTube. So I'm going to hurry and try to get to these real fast. So Haley says buying a put on the SPY. In my opinion, how far out would I go? Meaning like expiration, go out further than you think. With options, you always want to give yourself more time. So if you think the move's going to happen in a month, go out 3 months. So it's too late. Whenever you're buying options, unless you're actually hedging something, if you're just buying options to make money on the long side, you need to do it before the move happens. Because right now, these puts are going to cost you a fortune. They're going to be very expensive because everyone is protecting to the downside. They're rising those prices up a ton. Puts are in huge demand right now because the fear indicator is going through the roof. Like, man, another gap down, right? Especially on the Qs. But the fear indicator is going way high, which means you're going to pay an arm and a leg for these puts. So you're going to pay for these puts as if the price was down here. This is an easy way to think about it. You're going to pay for the puts even as if the price was down to here. So if you buy these puts now and let's say you buy them a month out and 2 weeks later, it starts to work its way back down and it gets to 457, depending on the strike you're getting, but even still, you're buying it inflated with higher IV. If IV starts to get sucked out, so IV means expected move. So if the expected move is 454 over a month, and we're getting to about 457, and it's been 2 to 3 weeks, you're going to lose on this trade, even though you were right on the direction. This is the issue that people run into all the time because they don't understand options. With options, you need to be ahead of the game. You need to buy puts when the markets are having big green days. You need, Friday would have been a decent time to, not great. I'm talking up into here, right? Up in here is when I bought some more, and I bought a whole bunch on this green candle. I bought a whole bunch at the end of this green candle day. Now, it wasn't at the top here. I think I bought them somewhere in here, but still, was I down for a long time? Yeah, I was for about a week or so. I was getting my butt kicked on those puts, but they expire like in March, right? And this was back in December. So I had plenty of time. And then the bottom falls out and they're worth a fortune. So then it gets down to here. And then I sell puts against my puts. I think I did that. Where did I do that at? I want to say around like 461 area. Somewhere in here is when I did that. It was around the open. Let me zoom in on this. It's actually a little bit bigger. When we gapped down and started to run, it was somewhere into here that I sold puts against my put, thinking that we were going to bounce, and it kept going a lot lower. That's okay. I sold like the 420. I don't remember. I think it was like the 420. It was way the heck down here. 425. It was off of this support. What that did was lock in. That gave me money and made it so it's really hard to lose on this trade. So I brought in like $5,000 from selling that put. My other put's up a lot. So on this entire bounce, I then bought back that short put, locked in thousands of dollars. My other put lost some money. That's okay. I'm still up. And then we rolled back down. And this is the exact same thing I'm looking to do again. So once we get back down to about 446-ish, 450-ish, somewhere in here, I'm going to sell more puts. I'm already at a point where I can't lose. And so that's how I've been playing it. So with puts, you need to be able to stay ahead of the game. Okay. That'd be my advice to you. So as of right now, I would not necessarily buy puts right now. I would wait for another dip, maybe another pop, and then get them up here or something. I'm not really sure exactly when, but I feel like you're too late to the party. This could be the bouncing spot right here, and you're jumping in too late. So that'd be my answer to you. But if you really wanted to do it, go 3 months out, give yourself more time than not. If we get, you can see my note. If we get above here, I'm going to hedge those puts with calls, because anything above 472 is going to be a very, very bull sign. So that's kind of like where your stop needs to be. And targets are anywhere down 455 all the way down to 430. So that's my thoughts. Cool. Let me get to something else. Should I sell my 30 shares of Netflix or hold it? Well, again, what was your plan on that? I'm not going to advise you what to do, but I would tell you, let's just say, I'll put myself in your shoes. If I own shares of this, I would hold this. I would have a hedge over earnings. So I'd put a collar on this, depending if you have 100 shares or not. If you don't have 100 shares, you can't put a collar on it. You can't sell a call against it. But no matter what, I'd buy a put. Buy one put. over earnings because I always do that with my shares. If it goes higher, I lose on the puts, but my shares make money. Now, if you have 2 shares, it doesn't matter. If you have like 70 shares, yeah, I'd buy a put. Okay. I would hold Netflix. The time to get out of Netflix was right here when it breaks this higher low. There's your higher low. So as soon as that bounce comes in, you need to put an alert right there going, that is my spot. That is where this cannot break. And then we break it. You either buy puts or get out. And then now you're looking for your place to get in. I'm honestly looking to start to get in on Netflix down here. I'm legging into Netflix here, so you shouldn't be getting out. Can it go lower? Of course. I've got a plan if it does go lower. I'm not putting my entire account on this, right? I have the correct risk in place, but I'm going to allow it to have the right risk, work for a little while. If it doesn't bounce, I'm getting in more. I have legs that I'm getting in and I'm hedging this. I'll make money to the downside as I'm waiting for it to bounce. So my short answer is I would hold. That's what I would personally do. He says, can you please do team and how low can it go? Oh, it can go low. Team, I feel like has lower to go. Once we start to fill this gap, most likely going to go lower. It'll probably go down to like 220 and then look to bounce. At least this is where I'll be interested in buying it. Does it mean it's going to? I don't know. That's pretty awesome volume right here. So we're getting close. We're getting close. It's like I said, it's really hard to hedge right here. The hedge point would have been the break of the higher low. So here's your higher low right there. Once we hit that, roll up and then break down again, that's where, again, the volume comes into. Everyone saw this. They're like, I'm out. It's not bouncing. Got some chop, broke down. We're going to retest. We did that already. Probably going to keep working its way a little bit lower. I don't know where to, somewhere in this range. So you're getting close to the buy button. Okay. You're getting close to the bounce. I think just don't expect it to be like, don't expect the V bottom. Nothing's going to V bottom, in my opinion. I feel like we're going to come down. We're going to kind of chop, go a little bit lower and chop, and you're going to do this for the next year and a half. That's what I think. So see if I'm right or wrong on a lot of these guys. Okay. Hurry and get to these other things. If you've got more, so like you said, swing trade. I need to answer your question real quick. SoFi, you need to have a stop on a swing trade. So where is your stop telling you to get out? If your stop has already been passed, you should have gotten out. So get out. Don't hope for the bounce. That's how you blow up accounts. You lose way too much on trades you shouldn't, right? Trading is all about risk management because you've got to understand how the game is played. And again, I have no idea like what you did, what you didn't do. Maybe you're profitable. I don't know. I don't want to assume on that. But for anyone that's looking, if you have a swing trade, you need to have a stop. You need to have at some point where you're getting out. If it's a long-term play, then play the long term. You need to pick again, like I've been doing, picking your spots to hedge. Where are your higher lows, like on a weekly chart? I don't go on a daily chart on my long term. I'm usually always on a weekly or monthly. You need to pick your higher lows. Your higher low happened right here. Went up, came down, and then retested the high. There's your higher low right here. So as soon as we break this, wait for a retest. Okay, buy puts or get out. So that's how I would be playing it with long-term stuff. If you bought it down here and it's going lower, that's okay. That's normal. Every time I buy something long-term, I plan on losing money on it for the next 6 or 7 months. Change your mindset. If you expect it to bounce at the moment you buy it, you're going to be very disappointed, right? And then when you're disappointed, you have more emotions. Your expectations bring in emotions. And when you expect it to be bullish because you're buying it at a great spot, let's go. This thing's been down 1,000,000%. It's at a good support. Let's buy this thing. I'm going to be rich. And then a month later, you're getting your butt kicked, your teeth knocked in, and you're like, oh, was I wrong? Was I stupid? Do I not know what I'm doing? Do I not know how to trade? I guess I'm just not seeing it right. And your emotions go crazy. And then you start to screw up the trade. And you go, screw it. And you just take $1,000 loss down here. And a year and a half later, it's back up to 150. And you're like, I bought it at 45. Don't let your short-term emotions screw up a long-term trade. So again, it depends on which one you're looking at. I know this is just an example on Penn. You're talking about a different stock, but this is what everyone does. You've got to follow your plan. You've got to follow your plan. If it's a long-term play, you need to have a plan of how you're going to hedge it. And then just also expect yourself to lose money for the next 6 months to a year. Expect it to be down. Don't expect to call the bottom. Expect it to go lower. Bubba said, I don't know about that stock. I'd never see that high again. It's possible. It's possible that this stock never sees it high again. It's possible that a lot of these COVID stocks that ran in 2020 like crazy, it's going to be a while. But again, this is just an example. Obviously, yeah. Sometimes that means just cutting it. Sometimes that means most of the time people run into issues when they don't hedge when they should have because they don't know what they were looking at, or they're trying to buy the dip, and buying the dip requires emotional control because it's going to be scary. It's going to be hard. It's going to go lower. Mark it down in the books. You will be negative. You have red in your P&L when you buy the dip. Very rarely does it just bounce and rampage out of there. Cool. So if it's a swing trade, you need to have a stop. You need to follow that stop and get stopped out and accept the loss. If it went past your stop, right? If you bought this thing trying to play this double bottom right here, and you bought it here hoping that it would bounce, and you had a stop right here, and you're like, it's not bouncing. And then you took your stop away. And you're like, it'll bounce. There's a lot of bear days in a row, and it'll bounce, and it'll bounce, and it'll bounce. And then a few weeks later, it just keeps dying. And you're like, well, it'll bounce now because now I'm really losing money and I can't. That's death. That is exactly how you blow up your trading account. So one last little thing before we jump off. Remember, trading, if you think about it this way, trading is a coin flip. So I say this all the time, but this is the greatest way to train your brain to think about this. You will only be profitable if you have a profitable plan that has correct risk that you follow. Okay. If on heads, you're making $10, if on tails, you lose $4, dude, flip this coin as many times as you want. You're going to make some money. Just flip it a million times. You'll be rich, right? This is the setup that we have with our trading strategies. When I lose, I'm going to lose this amount, an R, your risk. So if you put $100 on your risk unit, that's how much I'm going to lose. I'm going to lose $100. But when I make money, I'm going to make $200, right? That's my R. So I'm going to double my R. There you go. There's a profitable strategy. And guess what? You'll most likely, hopefully a little bit better than this, but most traders are probably going to be sitting around 50%, and that's totally fine. That's normal. 50% win rate, normal when you're swing trading, day trading. Now, can it be better? Can you be like, well, I have a 62? Of course, you can have better than that, but that's very normal. I know a lot of professional traders that are sitting right around that 50% win rate. How are they profitable? Why? Because when they win, they make 200, and when they lose less than their R on average. So they're losing like $70 or $60 when they lose. Again, it's the same scenario. Win on $10 on heads, lose $4 on tails. Flip that coin enough times and you'll be rich, right? What happens if you change this scenario and you don't take a stop when you should have taken a stop? So now you lose $8 on tails and you make $10 on heads. Dude, you're going to struggle to make anything. It is going to be a battle. What if you lose $12 on tails now because you don't correct your risk and you blow up your account on one trade, or you lose $3,000 when you should have lost $200 because you just couldn't allow yourself to get out till the pain is so bad that you finally are like, I can't handle this anymore, right? It changes the math. You've got to have the math on your side to be profitable because you realize you're going to have around a 50% win rate. Hopefully better, but that's pretty good. 50% average. It's fine, right? Jeremy always says, hey, I win on one, I lose on one. That's my normal day in the trading stock market world when I'm day trading. That's my normal every day. Lose on one, win on one, win more than what I lost, and I'm profitable. So Don't screw up the math. My whole point of this is if you have a stop in place, what is that stop doing? That stop is controlling your risk. You need to be able to lose small and win big. The problem with new traders is they win small because they are so excited to make $50 in 10 seconds that they take it when they should have made 200. And they lose huge because they can't get out. They won't allow themselves to get out. So you can see how they're flipping the math, and there's just no way to be profitable. You could have a great trading strategy, but if you can't control your emotions and you can't follow that plan, you're going to be screwed over every single time. And you're like, well, I've traded that strategy and that strategy sucks. I never made any money. Well, yeah, that's because you didn't follow the math of that strategy. That strategy is dependent on you losing less than an R on your losses and you making more than 2 Rs on your wins. But every time you were up, you took your profits really quick. And every time you're down, you erased your stop and just said, no, it'll bounce. I can't afford to. And you just let the thing blow up to the downside, right? There's my little Tony tip for the day. YouTube, I know there's a million other things you guys wanted us to talk about. Sorry. I feel like I answered most of them. There's still a few tickers and stuff we could not get to. That's okay. Remember, if it's not outside the range of the previous day, I would say pass 98% of the time. Go find something else. Don't be like, well, I feel like it's going to do this. That's fine. Just know that it's choppy. It's really tough to trade inside candles. Even Jerremy Newsome, the master day trader, has been just stupid profitable and ridiculously successful for years and years and years and years, still says he mainly loses. His losing trades mainly come from inside candles day trading. They're just not easy to trade. Go find something that's showing strength to one side or the other. All right, my friends on YouTube, thanks for hanging out. We'll be back same time, same place tomorrow. Remember, free week on real life trading is the 24th, I think. Is that the Monday? Yeah, 24th. So next week, you can come join us. You can come trade with us all day long in the trading rooms and change it. It's free. We don't ask anything in return. We don't hide anything. We literally give you everything, all of our trades, everything during that week. So come tell everyone you know. You can sign up at reallifetrading.com. You just literally put in your email address. You create an account. You have no money. There's no credit card required. There's nothing. Come trade with us. You can have that account forever if you want. You don't have to cancel or anything. Yeah. Enjoy the free week.